Hey everybody, it's David Lenevu from Rockmore Wealth Management, back to you by popular demand. I hope everybody can come visit in our brand new office when it's appropriate to do so, and I hope everybody's staying happy, healthy, and safe during this second wave. Now, one of the things I wanted to talk to you about over the coming weeks is a critically important topic that we haven't had the opportunity to discuss yet, and that's disability insurance. And disability insurance is critically important to your ongoing financial plan. And the reason being is if you can't earn an income because you're sick or you're injured, you've lost one of the most important financial assets that you have, which is your human capital or your ability to make an ongoing income. Now, many of you will have disability insurance through your employer, but many self-employed people and people on contract work do not have any disability insurance at all. And you have to look at this very, very carefully, because many people figure, well, I'm just going to continue to put money away, and if I get disabled, I'll have enough money put away. Well, unfortunately, you could put thousands and thousands and thousands of dollars away every month and every year. But if you get disabled and you're disabled permanently and you lose that ability to earn that income, I don't care how much money you would have been able to earn on an ongoing basis, it's not going to be even close to what a proper disability payment will pay you all the way up until your retirement. Now, when it comes to getting a disability insurance policy and qualifying for it, it's going to be very, very similar to life insurance and critical illness insurance, with a couple different exceptions. Now, as you guys are probably aware, life insurance and critical illness insurance, if you had to make a claim on those, what would happen is you'd get a one-time tax-free lump sum benefit paid to the beneficiary. Now, disability insurance works a little bit different in most cases, and this is for personal disability insurance. In this case, if you can't earn an income due to illness or injury, the disability insurance is going to pay you a monthly predetermined benefit that should be tax-free if the policy was set up correctly. Now, the length of how long you get paid that tax-free benefit is up to you and how you design your insurance policy. Now, when it comes to qualifying for the disability product, it is also very similar to life and critical illness insurance, with one big exception. As you're probably aware, again, to qualify for personal insurance, you need to be healthy. They're going to determine the price of the premium based on your age, whether or not you're a smoker, and whether or not you're female or male. Now, when it comes to disability insurance, they're going to take one more factor into consideration, and that's what you do for a living to earn your income. So you have to imagine that if you are on a job site working with your hands every day, you're going to be much more at risk to being injured as opposed to somebody that sits behind their desk all day. Now, the insurance company does take that consideration in when they're pricing the premiums, because they actually have what's called an occupation class that they're going to assign to you based on what you do for a living. And in most cases, there's 4 different occupation classes and sometimes 5. And the more that you work with your hands in general, the likelihood that the disability premium is going to be a little bit more than for a person that might be sitting behind their desk and has a professional designation such as a lawyer or an accountant. Now, when it comes to how you're going to get paid for that disability payment should you get sick or injured, most people want to get paid as soon as possible. Now, while that is an appropriate thing to happen, you have to understand what and how it's going to affect your premium. Because when it comes to disability payments, you are generally given the option of having a waiting period. So that means, how long am I willing to wait before I start getting paid? Now, if you have a 0 or a 30-day waiting period, you're able to get those options in most cases, but you're going to have to pay a large premium for it, and it could be as much as double as some other waiting periods. And it does make sense from an insurance company standpoint, because the sooner the insurance company has to pay you, the more at risk they are and the more payments they have to make to you, so they're going to charge you an extra premium for that. So you can have generally a 30-day waiting period. If you choose to wait a little bit longer and have a 60-day waiting period, you're going to have a significant savings. And then what I will call the sweet spot is a 90-day waiting period, because once again, if you wait a little longer, you're going to again see a significant savings over a 60 or a 30-day waiting period. Now, you can choose to wait longer than 90 days, so you can wait to 120 days, a year, or 2 years even. But after 90 days, you really don't see much of a significant savings. And this also makes sense from a financial planning perspective, because any good financial planner will tell you that you should have anywhere between 3 and 6 months worth of bill payments saved up. So 3 months worth of bill payments saved up is that 90-day waiting period. So you should be able to wait at least 90 days before the disability benefit kicks in. And this is going to be very important to how you design that disability program. Guys, that's all I'm going to talk about today on disability. We are going to get much more in depth over the coming weeks. I look forward to seeing you guys then.